Hey everyone, welcome back to your Money Your Life podcast. We're on episode 334 of the pod. So make sure wherever you're listening, you do me a favor, you like, subscribe, five-star rate and review this podcast. We do this every week. And the first thing we usually start out with this week is every week is starting with the market and understanding what is going on in the financial markets. So let's get a better hold on that. And we will jump to our chart and show the past five trading days, which again have been roughly flat. A little bit more volatility, minor volatility, I'll say, but roughly flat over the past five trading days. Past month, same return, flat, same return, just flipped. A positive 0.27% versus a negative 0.27% in the past 5 days. The past month is a positive 0.27%. 6 months, you're getting close to 8% positive return. And year to date, 8.7% positive return there. 1 year, we're at 20%. Again, longer term investing just bodes well. It's the way you beat inflation. It's the way you retain the value of your dollar. It's the way you have appreciation on your dollar. You want to do those things in the long term, especially for young people. And we'll talk more about it in the roundtable about what it looks like if you're deciding if you can invest versus not, versus paying off debt versus any of those things. What's the way to approach it? So that's the biggest things in the market. What's driving the market? Let's talk a little bit about that. Semiconductor chips have been having the semiconductor SMH ETF and this any semiconductor ETFs have been having incredible past year in appreciation as a lot of chip buying is in focus. The sentiment in that industry is that they're going to be used a lot more, need to be produced a lot more, need to be bought a lot more just to handle the AI compute power and the usage that we're going to be seeing in the future. And the compute power usage we're going to see in the future. So the semiconductors are leading, semi-leading the way with the market, along with Mag 7 and tech. That's going to be the big thing. We did see that the US did launch fresh strikes on Iran in response to attacks on commercial shipping in and around the Strait of Hormuz. So we're back to the battle. It looks like the ceasefire is off. We're back to the battle. But however, crude futures, the oil crude futures, were flat after the president said he called Iran to make a deal. This comes after he said Wednesday he may no longer be interested in negotiating with Iran. And prior to that, he said that the ceasefire between the US and Tehran is over after another wave of attacks in the Middle East. So again, back and forth. Again, I said this would be something that's not going to be resolved quickly. It'll be back and forth. Now, the only thing we want to know as investors is how the market's reacting. It looks like the market is kind of understanding this is going to be a flip flop back and forth situation for a bit. And so they're keeping that in mind as they approach the market. And the oil futures didn't move, crude futures are flat. So people are just expecting this back and forth for a while. Um, there is other again, there's geopolitical risk, there's different things going on. But again, the market's been slugging higher. We'll see if that continues going forward. You have a look at treasury yields as well here on the chart. And nothing crazy. Again, summer is usually a slow month. It's usually slow months. July, slower months. You see people on vacation. It's slower months for trading and big news usually. So we'll keep an eye on that. But here's what the Fed is saying. The Fed minutes, which show the minutes from the Federal Reserve from the June meeting, are released a bit later, and they were released and they showed a divide among the policymakers over the decision to either hold interest rates steady, with some that were advocating to increase rates. So this was Kevin Warsh's first meeting as the chair of the Federal Open Market Committee, and he noted the upside risk to price stability remained elevated, while downside risk to achieving maximum employment had moderated a bit. However, as uncertainty over the Middle East conflict resurfaced, investors on Wednesday were pricing in 1 to 2 quarter point rate increases this year. So, like, investors are pricing in 1 to 2 quarter point rate increases this year, but that's definitely not a certainty. As you see, the Fed is split on which way to go. Remember, we were lowering rates. The last thing we did was lower rates. And now we've just been keeping things steady. The last move we made outside of keeping things steady was to lower rates. So now people are thinking we're going to increase rates because inflation might be picking up. Upside risk to price stability has remained elevated, while job and achieving maximum employment has gotten better. The risk there has gotten better. So we're gonna have to see what is going on. But no, we're still at the federal fund rates at 3.5% to 3.3 and three quarters. But the minutes show the committee spent much of its time debating whether inflation could remain elevated for longer than expected. A few officials said there was a case for raising interest rates at the June meeting, while most agreed that the future policy would depend on whether inflation continues to cool or proves more persistent. So they also had a shift in how they view the economy. So again, this is insight from people that are seeing the data firsthand right away and making policy decisions based on that data. So we're gonna keep our eye on that. I was curious about this story. Delta announced no frills business business basic business, excuse me, fares. Delta Airlines launching basic fares for business and first class cabins. Customers who opt for no frills basis tickets will receive the same lie flat seats and in-flight amenities minus perks like lounge access and advanced seat selection. The move comes after rival carrier United Airlines launched a similar streamlined option this year for its Polaris business class and other premium cabins. Interesting. So again, airlines is just they're changing. They keep changing things. They're shifting things. I don't know if you can fly economy anymore. Like not just because of Drake said that, but because we are. It's this. Have you ever the seats? Like I don't know if it's impossible. The seats. I feel like they're making them smaller, right? Like the seats are just super small. I don't know what they're doing. They're just squeezing every inch of profit and margin. They used to be comfortable for everyone to fly, no matter what cabin you were in. And now they're like purposely making economy incredibly uncomfortable so that you have to upgrade. It seems like to me. I don't know. That's pretty interesting. That is pretty interesting. What else is interesting is Google search breaks a major record thanks to the World Cup. The World Cup has broke the internet on Google search. At least the search engine saw a record number of queries per second right after the winning goal in Tuesday's knockout round between Argentina and Egypt. That's interesting. So they had the most number of number of queries per second right after the winning goal in Tuesday's knockout round. Interesting. So Google's search broke all prior usage records and saw its highest usage in history right after Argentina scored the winning goal in yesterday's match. And coming from SVP of Knowledge and Information at Google. Um, Interesting. Individual players, particularly Argentine star Lionel Messi, asking Google search if this is his last World Cup. Interesting. So people are interested if this is his last World Cup for Lionel Messi. In general, just using the search engine, that's pretty good. I mean, the World Cup's really exciting. Most watched international, worldwide, global sport. And you're seeing a lot of reasons why here. That's pretty interesting. Any other news that we wanted to get into, we will look at now. SpaceX just got a wave of bullish ratings from Wall Street analysts. So SpaceX received more than a dozen positive analyst calls on Tuesday, including from major Wall Street banks, as they're initiating coverage on Elon Musk's space and AI company. We obviously know SpaceX went public last month. It had a huge valuation, the largest debut in history of $2.2 trillion valuation. Company, of course, has not posted a profit, but it seems to have convinced Wall Street that it will get there and grow its valuation on the way. And people know about this. If you're the way these investment banking, you know, banks work, they do different functions. You have the research analyst side, you have the sell side, you have the investment banking side, and they're supposed to be separate from the research side. And the research side knows that they have to be, in a lot of terms, sometimes positive, scratch the back of the people that they're covering if they ever want to get investment banking fees for something in the future. So just keep that in mind. Just keep that in mind. There wasn't much, folks. So let's do actually talk about the roundtable and like what is a way to approach how to think about investing, saving versus paying down debt. That's a huge, huge thing that I'm seeing from the people that were running across meeting. Their thought process on that, how they approach it, if it makes sense. That's what we want to really touch on here. So let's dive into that. So the first thing I think everyone needs, is the emergency fund. So this is a fund. It could be a high yield savings account. It could be anywhere, but it's going to be used to, you could put a little bit away per month, per paycheck. It doesn't matter, but it's going to be used for that stability, that security for any emergencies needed in the immediate future. It doesn't have to pile up with cash. You just need it for those immediate emergencies. Once you start to build that, you can simultaneously build that and maybe fund an individual account as well. Why individual account? Because it comes with no restrictions, that general wealth building. We could get into the IRAs, but if you're someone that's just building the foundation, you may not be ready to put money into the IRAs because it'll come with stipulations that that will be want that the IRS pretty much wants you to keep the money in there. That started with, it has a penalty for early withdrawals for the Roth and traditional. So the individual account will be the one we'd probably focus on first and foremost. And you could still do all of this while paying down debt, right? Like if you split up $100, you could split it up multiple ways, right? You could put, $20 into your emergency fund, another $60 in to pay down debt, another $20 into your individual account. So it's able to do that. And just speaking in round, simple, small numbers, it's able to be done, and it just has to be a consistent thing. It has to be a consistent drive. It has to be a consistent disciplined thing that's done month over month and attacking it. Even if something comes in a bump in the road to jump to deter you from the kind of the system you have set up, you can still get back on track. So that's something to think about is how you do it. Now, automating is good, but again, if you have variable income, you can't really automate percentage wise, on certain things. You usually do it on the numeral number. So then you'll have to go in a monthly and just kind of update things. That's super easy enough to do, right? So that's how you want to keep it. You want to be able to do all these things, and you can do all these things. It's just a matter of having the right setup and help to do that. So, folks, that's the Your Money, Your Life podcast this week. Make sure you like, subscribe, 5-star rate and review, share this with a family or friend, and we will talk to you next week.